there, Teresa Tims. I've got a market update for you. I'm just sending out a letter to my friends and family and past clients. I thought, hey, why don't I share this information with my YouTube viewers. All right, so we are seeing interest rates head up through the end of the year. We've got a couple more Fed rate increases. That is happening. Restrictions on cash out refinances are tightening, making cash out harder to access. And what I mean by that is you can go up to an 80% on traditional financing, but the cost is just a lot more. And when we're running these loans through the automated underwriting systems, they're just tightening up the restrictions. So we're seeing, we had a sweet spot at 8, sweet spot pricing wise, the guideline wise at 80, but we're seeing that come down to 70, 75. And I mean, let's face it, 90% of America has an interest rate under 3%. So you are most likely better served by a home equity line of credit. And we can give you a referral if you call or text the office to 909-920-3500. We've got a company that we've been referring our clients to with great success. All right, so I have all of my key points on this letter, so I'm just going to be referencing this. So interest rate relief will come when the recession kicks in. So, how far off is the recession? How far into the recession do we have to be for the feds to say, hey, let's fix this by lowering the rates and stimulating the economy via the housing sector? The housing sector provides great relief in times of needed stimulation. So look for that to happen. And I think a lot of estimates are like the end of the year into next year. And it's just hard to pinpoint it right now because we don't know. We just don't know. We don't know how deep the recession is going to hit. It's really going to depend on many factors such as job loss and things like that. So home values are remaining stable and declining in other areas to a nice normal situation. And what does that mean to you? It means that houses that are overpriced are sitting. And when a house sits on the market for 30 days or more, they do price reductions. So it's not so much that, prices are coming down. It's that a seller really needs to hit the mark when it comes to the list price. So look for prices to stabilize in a lot of areas. We're not going to see 20 or 30% increases in values like we did last year. We're entering into this market equilibrium. It's really, really a nice time because we're getting offers accepted on buyer programs. We're getting closing costs accepted, and it's not like on every offer. I mean, we've still got, prices in that $500,000-$600,000 mark in the Inland Empire, where it's such a desirable price range and the payment is affordable. And so you have competition in that market. You're not seeing, great price reductions, and you're seeing multiple offers. I liken this period to something called the Goldilocks moment. The market isn't too hot and it is not too cold. It's just right. You remember that, right? We are evening out. We've seen all markets in Southern California with 3 times the inventory. So we've had inventory increase times 3 in almost all of Southern California from March to June. Now that is an indicator, but we're just getting back to inventories in early 2020. And the inventories in early 2020 were not that plentiful. So we really need to get back to inventories that we saw in 17 and 18. And that's kind of what a lot of economists and local Southern California housing data providers are suggesting, that we need to get to that point to bring even more equilibrium. So not quite a seller's market, not quite a buyer's market. The one cool thing though is that, in the next few months, there's going to be a lot of opportunity for home buyers that were shut out previously. Yes, the rates are high. Yes, prices are still up there. But it is the one sure method to leverage against rent increases. And rent increases are no joke right now. If you've talked to anybody that has went out and tried to rent a home in Southern California, in the last 6 months, they will tell you how extremely difficult it is. It's almost harder to rent a house than it is to buy a house right now. And we want to impart on you, I want to impart on you, help your friends and family become homeowners. People that have been wavering on the fence, give them my name and my information. A lot of times we don't need to do the hard sell where we run the credit and have all your information. We can just chat over the phone, give you payment options, tell you how much money you need, tell you, if you can qualify for some type of a buyer program. And those are all important things that people that maybe are first-time generational buyers, maybe nobody in the home has owned a home before, or maybe you have a sister or brother and you're a first homeowner. Help your family come up, help your family build that wealth through owning housing. I feel like it's a really, really important time. Now, the end of the year is nearing, right? And if you're like me, you haven't hit all of your goals. And if owning a home is one of them, let's take a look at what you need to do to get you prepared. If you do own a home and need a little bit of money, let's take a look at a cash out loan versus a home equity line of credit. Unless you're like 90% of America that has an interest rate under 3%, a HELOC, a home equity line of credit, is going to work for you. And we have a referral partner that we've been sending our referrals to, and they've been doing a great job since 2010. And in the last few months, I have sent him a bunch of clients with no complaints. So they're a good company. Happy to give you a referral. Can you pull off a move-up purchase? Let's take a look at that. Maybe we can exchange your equity. Can you buy a second home? Can you buy a second home? Can you buy a vacation rental? Is that an investment property? Let's take a look at possibly getting you an investment property. And it doesn't even have to be here. What if you're close to retirement age and maybe you want to buy that second home in Florida or Tennessee? Maybe you have a rental property that you can do a 1031 exchange and take the proceeds, cash out of California, exchange it into the area that you're going to be retiring in. Now is a good time to start all of that planning. And I have all the answers to all of those questions and more. I have been lending in Southern California, since 1998. And I treat all of my clients as though they were family or friends. And I evaluate every situation as though it were my very own. Sometimes the right way is harder. And sometimes the right way, if you're working with an internet lender, you're just another number, right? If you're working for a bank, you're just another number. They're not going to look at all the options. You might call them and tell them what you want, and they'll give you what you want without even evaluating what is in your best interest. So that's what we do at TDR Mortgage. We've been doing that since 1998. Call or text today to 909-920-3500. Let us help you. Comment and like below. What are your thoughts? What are your struggles? What are you looking to do? What are your goals that you want to hit by the end of the year? I'd love to hear from you. Have a beautiful day.